CNBC TV 18, celebrating 15 years of leadership.
You tax cigarettes, more consumption goes on to cigarettes that are contraband, or goes on to other forms of tobacco consumption.
Hiking excise on cigarettes won't just hurt ITC, it will lead to a significant revenue loss to the government, cautious Chairman YC Deveshwar says any further excise hike will be passed on to the consumers.
I think in the next 15 years, 100,000 crores of FMCG business is not beyond the reach of this company.
ITC's FMCG business could touch the 100,000 crore rupee mark in the next 15 years. That's the word coming in from YC Deveshwar. The company is targeting an annual growth of 15 to 20%. ITC is also scouting for acquisitions to aggressively grow its technology business.
In 90% of respondents in the CNBC TV 18 credit policy poll do not expect a rate cut from the governor tomorrow. However, a majority are betting on further easing of rates after the union budget.
And the Wall Street starts the week on a choppy note. The indices fail to hold on to the recovery seen intraday. The Nifty slips 11 points to close below 8,800. The Nifty ends the day down 20 points at 29,122.
India's infrastructure sector struggling. Core sector growth slows to 2.4% in December against 6.7% in November. Electricity, cement and coal see the biggest decline in performance during the month.
And top corporates in the fray for small and payments bank licenses. Reliance Industries, SBI, Future Group, AV Birla Novo all apply for a payments bank license as the deadline expires today. Bharti Airtel also eyeing a license.
January turns out to be a mixed month for the auto sector. Two-wheeler major Bajaj Auto reports a sharp drop in sales. TVS Motors show signs of sluggishness, but Maruti sales surge driven by soaring exports. Eicher Motors also reports a 25% rise.
And the finance minister is set to roll out a LPG subsidy rationalization roadmap in the budget. Taxpayers in the 30% and 20% slabs may fall out of the subsidy net. That's an exclusive.
The e-commerce industry basks for more FDI and an easier policy regime in the budget. Expects budget 2015 to signal a new era for growth if the government sticks to its promise of improving the business environment.
Advertising spends will rise by about 12.6% in 2015. That's according to a survey by Group M. Findings also show that brands and not political parties will be the ones widening their wallets.
After a super Sunday with star campaigners from all the political parties hitting the campaign trail, it's turned out to be a manic Monday in the national capital. Allegations, counter-allegations, verbal attacks as well as physical attacks. Political parties leaving no stone unturned as the battle for Delhi enters its last leg. Good evening and thanks for joining us here on India Business Hour. I'm Nantara Rai.
Hi Nantara, and we at CNBC TV 18 of course are keeping a close watch on the chief ministerial race in Delhi. The Delhi team is very busy with that, but for now let's talk about the trading action for the day. Very volatile day, Nantara, but you know, before we talk about the trading action, happy anniversary. You complete 7 years in CNBC TV 18 today.
Okay, thank you, Kritika. And I'd like to say, do not have this 7 year, 8 years to another 7 years at CNBC TV 18. On to the last three, the markets witnessed an intraday recovery after a sell-off in the morning. The indices could not hold on, slipping back into the red in the last 1 hour. The Sensex gave up 60 points at close, shutting shop at 29,122. The Nifty just fell short of the 8,800 mark, losing 11 points. The talking point today had to be from the mid-cap space, with that bucked the trend. index going up by about 0.6%. The markets might be headed for bigger and better things, but we cannot say that for the economy just yet. Seems to be in a world of pain. Growth in the 8 core sectors of the economy dropped to 2.4% in December, as against a 6.7% growth recorded in November. Lata Venkatesh now joining us to help us understand these numbers. Lata, what's your analysis?
Well, it is a very tepid performance, you will have to say. At 2.4% growth, it comes after a 6.7% growth in the core sector in November and a 6.3% growth for October. It's only coal that appears to have done reasonably well at 7.5%, but even that is several shades lower than the 14 to 16% growth put up by coal output in the months of November and October. Likewise, electricity growing at just 3.7% is a reasonable performer, but so much lower than the 10 and 13% growth that this sector put up in November and October. I could say likewise for cement, which grew at 3.8%, it grew at 11% in November. Refinery products was a saving grace with 6.1%. That's about comparable performance in November as well. There was contraction in crude oil, minus 1.4%. Contraction in natural gas, but that of course we are familiar with, minus 3.5%. Fertilizers contracted by 1.6%. Again, that's a familiar story this year, largely because of the poor net sown area, both for Kharif and for Rabi. As well, there was contraction in steel, which is quite a surprise. After 4 months of somewhat tepid growth, December has actually shown a contraction of 2.4% in steel. This could be global crashing of steel prices coinciding with some appreciation of the Indian rupee, making landed steel much cheaper than domestic steel, and that could have caused some bit of contraction of output. All told, the entire story is one of slowdown. There are some who believe that it was such good performance in October and November that this is just a bit of mean reversion or payback time. But if you looked at the PMI number, which came in for the month of January earlier today, that stood at a fairly pathetic 52 points compared to the 54.7 that we had reached in earlier months. So manufacturing PMI in January was a 3-month low. As well, the auto sales, especially two-wheeler sales, had nothing to write home about, especially the sales of TVS and Bajaj Auto. So all of that is indicating that after a brief show of strength, perhaps of recovery in October and November, slowdown is catching up yet again.
All right, Lata, thanks for breaking that up for us. But it's credit policy time. The RBI has already cut the repo rate by 25 basis points this month. And out of 10, what should markets expect from the governor this Tuesday? Here is a poll done by our banking correspondents Manasvi Ghelani and Ritu Singh.
The man is known to surprise the industry. And he did just that by announcing an out-of-turn repo rate cut a fortnight ago. But that cut has trimmed down expectations of another rate cut from the central bank on February 3rd. Just 10% of bankers and economists polled by CNBC TV18 expect a rate cut. And that 10% expect a cut of 25 basis points then. The majority believe the rates will remain unchanged this time, but they see the governor acting post the union budget. 55% expect the RBI to announce 3 more rate cuts in 2015, taking repo to 7% by the end of the year. 35% expect only 2 more cuts this year, while 10% see only 1 more rate cut coming their way. What else do finance experts expect in the policy? A majority said the RBI will lower its CPI forecast for March to under 6%, while 35% expect the RBI to keep the March CPI forecast unchanged at 6%. Only 20% see the RBI cutting it to below 5.5%. But more than this, bond markets will closely be watching the governor's tone and guidance. 80% of respondents expect the RBI to sound dovish this time, while 20% expect him to stay neutral. In fact, the words may be more important than action this time. In Mumbai with Ritu Singh, Manasvi Ghelani.
Now, this sense of optimism among India's top bankers was fairly visible in the recently held Mint Banking Conclave. The general consensus was that the rate cycle has now turned. As India enters the early stages of an economic recovery, the bankers expect anywhere between 75 to 100 basis points of additional rate cuts in this calendar year. Listen in to what they had to say.
The general consensus is that we could potentially see a 75.
If inflation remains stable, and if everything else is all right, then actually today the policy rate and the interest rates in the market are different. And so will there be a rate cut? Absolutely.
Our economist's view is another 75 basis points over this coming fiscal year.
I don't really think that the RBI is going to move again so quickly, but then the RBI can definitely surprise, and they may surprise the market.
My expectation is that we may see an interest rate cut. Inflation looks benign. Right. Energy prices have gone down. If you look at the central banks globally, are looking at a softer interest rate scenario or environment. So I would expect interest rates to come off.
If all goes well in terms of the macroeconomic situation remaining stable and inflation coming off to levels that the Reserve Bank is comfortable with, there's no reason why rates couldn't decline by 100 to 150 basis points.
The country's top bankers expecting Governor Rajan to cut rates by 75 to 100 basis points to the course of 2015. We'll of course be tracking Tuesday's monetary policy live for you right here on CNBC TV 18. The deadline for submitting small and payments bank application expired earlier today. A slew of corporates were seen knocking on the RBI's doors to get such a license. CNBC TV 18's Ritu Singh now joins us to tell us who all have applied with the central bank. Ritu, that list certainly got longer today.
It did, Nentara. In fact, we saw some heavyweights, including the likes of Reliance Industries, that have come out and said they want to form a payments bank in a joint venture with State Bank of India, where the bank will hold a 30% stake. The other heavyweights include the likes of Bharti Airtel, that is looking to form a joint venture with Kotak Mahindra Bank to set up a payments bank. AB Nuvo was another big heavyweight that came out and said it is looking to apply for a license with its group company Idea Cellular, where it will hold the majority stake and Idea will hold the remaining 49%. Future Group also said it will set up a payments bank license, payments bank by the name of New Future in a joint venture with IDFC. Sources also indicate that Vodafone may tie up with Yes Bank to apply for a payments bank license. So some of the biggest corporate names in the industry that have come out and said they're interested in applying for these licenses. As far as the small bank licenses are concerned, we saw the usual MFIs like SKS Microfinance, SE Holdings, IIFL Holdings, as well as UAE Exchange India that have submitted their intent of application for applying for these licenses. Of course, sources indicate that as many as 50 or more may finally may apply for these licenses. Of course, the final list will come out once RBI releases the data. But of course, a key trend we notice is these large corporate houses coming up to apply. The main reason being that it will give them a good reach to tap a large customer base of small and unbanked areas.
Thanks, Ritu, for joining us with those details. Ritu was pointing out a lot of heavyweights today applied for getting those licenses. Here, the CNBC TV 18 exclusive. Finance Minister Arun Jaitley all set to roll out a roadmap for LPG subsidization on 28th of February while presenting Budget 2015. Sources say Jaitley is expected to decide by then the eligibility criteria, as he is quite keen, and he has said in the past, the undeserving should not get LPG subsidies. So how will the undeserving be defined according to sources? It could mean withdrawal of LPG subsidy for all of those that fall in the 30% personal income tax slab. Even taxpayers in the 20% slab may fall out of the LPG subsidy net. Apart from that, the government may announce tax incentives to laying down piped cooking gas network. All of this to attract investments in smaller towns and bring down the cost. Kritika, over to you.
Nentara, the big interview today as the finance minister gets ready to present the budget. ITC is bracing itself for another excise hike. Chairman YC Deveshwar says that the government's decision to squeeze the cigarettes business is forcing the Revenue Department to now introspect. Cigarettes make up only 12% of the total tobacco basket, down from 20%, and a decline in volumes is not only hurting ITC but also the exchequer. The ITC chairman is cautious and says that the tax base has shrunk so much that the industry is now at a tipping point. But cigarettes aside, ITC continues to battle ahead with its plans for its FMCG business. The ambition is to touch the 100,000 crore rupee mark in 15 years with forays into juice, dairy, coffee and tea. Surprisingly, ITC is also putting its might behind its 1,200 crore rupee tech business and is also on the lookout for niche acquisitions. Here is an excerpt of that exclusive conversation.
Well, we are all hopeful of a much more progressive budget than we've been accustomed to in the past. And I hope that it will be a moderate budget as far as taxation is concerned, because evidence very clearly is that more you tax cigarettes, more consumption goes on to cigarettes that are contraband, or goes on to other forms of tobacco consumption. So there's a loss of revenue and there is a loss to the Indian brands, legitimate Indian brands.
The approach of this government to your sector is one of antagonism, would you say, or seriousness?
Well, I don't know. I think they need to study this sector a little more carefully, because at first sight, if you import policies of the West, where the predominant form of consumption is cigarette form, and then you adopt those policies here, is not what is going to work here. So hope sustains life. I'm quite hopeful that people here will give it a fresh look, because over the last 40 years, high degree of taxation has shrunk the share of cigarettes from 25% to 12%, whereas the total tobacco basket of consumption has grown.
That's right.
So if health was a primary reason for high taxation, that purpose has not been served, because 60% of tobacco consumption in India is not even packaged. So if you are truly a person who's concerned about public health, then you should be doing something about that 60% that is not even packaged and is consumed by those who don't even have the financial resources to look after their health.
But do you really believe that something is going to be done as far as that end of this tobacco basket is concerned? Because successive governments have said that they will address it and have failed.
Because I think the underlying reason has been to milk cigarettes for revenue, because cigarettes are consumed by higher income strata of society. But now we've reached a tipping point. Now we are now on a path of accelerated decline in volumes, and the tax base is fast shrinking. So what we've been saying all these years has been a warning that don't shrink the tax base beyond a point, because after that it will be difficult to recoup from that position. But that position has been reached now.
So given the fact that it is likely that we are going to see a fourth year of consecutive excise duty hikes, and given the fact that you've articulated that we're at the tipping point, do you have the capacity now to pass these off as price hikes without impacting your margins, without impacting volume decline even further?
No, we will pass it off to the consumer when they...
Even if it means coming at the expense of volume growth? Because
at the end of the day, revenue collection from this sector is far greater than the profit that is made from this sector.
Sure.
So if it doesn't pinch the revenue man, it will have to pinch us also equally.
Do you see the numbers changing significantly?
It all depends, because this is a heavily taxed sector. Now, lots of state governments that had raised VAT have revised it downwards. Because they figured that they were losing revenue.
Right.
So I think ultimately, you see, the best thing is to learn from somebody else's experience. But if you don't learn even from your own experience, then you are yourselves to blame. So at the end of the day, now the proof of the pudding is in the eating.
Sure.
Now it is visible as to what is happening. And lots of state governments have reversed their VAT duties because they were losing heavily. This business, I think, has got everything going for it. And we are into our next phase of strategy. Our first phase was, of course, to do product development and get consumer franchise. But now we are laying out an infrastructure for logistics and manufacture, for delivery, for lowest cost delivery to the consumer, which over a period of time, once gets implemented, I think it would be irresistible, this business. So I think in the next 15 years, 100,000 crores of FMCG business is not beyond the reach of this company.
100,000 crores?
Yes.
Okay. And what can we expect now in terms of new areas of diversification? I know you started the dairy project as part of your animal husbandry business. What more can we expect? There's a lot of talk about chocolates, for instance, a beverage market that ITC is going to be foraying into. What can we expect? How quickly? How soon?
Well, we've already entered the juices market with our brand Be Natural. It has just been launched, I think, about a fortnight ago. And we are going to sort of drive that for a while. And then we're going to get into beverages, including dairy products. And I said earlier to you, I recall, that anything that can be categorized as fast-moving consumer goods,
you will do.
We will do sooner or later. Because at the end of the day, the institutional capacity of ITC and the nature of fast-moving consumer goods business are very well aligned. And we derive a lot of strength in this area.
So what is the kind of incremental revenue that we can see coming in from your new launches? For instance, you've already a fortnight ago launched the juice category.
This is again in the realm of
you told me
guidance.
You told me in 15 years you can be 100,000 crores in FMCG. So give me a pointer.
That is not guidance for the next quarter.
I'm not asking you for next quarter. Give me a sense of where we can see this business or these individual categories over the next
I can tell you.
12 years. 12 months, 24 months?
It is our avowed objective that in each category we would aim to be market leaders.
That's your stated position.
Now, what has happened so far is that in many categories, in Atta we are number one. Ashirwad Atta we are number one. But in many categories we are number two. And in one category we are number three. So our objective over a period of time is to become number one in each category of our operation. It would be safe to assume that if you look at a 5-year picture, I would look at growth rate between 15 and 20% annualized to achieve that, providing our economy picks up the way we are all hoping that it will.
Always been very clear about differentiating. So what is going to be the differentiator for the juice business?
See, the juices business holds a huge potential. And we are going to use the same sourcing strength that we used for our Atta business with our agri-businesses division. They're going to be the sourcing partner for this business for sourcing pulp. Now, jamun is going to be a unique product that we are bringing to the market. I'm told it's already going off the shelves in Bangalore. Now, how our juices will be different? Because there will be no added preservatives, no artificial color, and no artificial flavor. So there will be juices, pure juices, that will be in the market.
And what will be the differentiator then as far as the dairy products are concerned?
Well, dairy products, the differentiator, we are still building on it because this is a back-end based business, and the collection of milk and the kind of animal from where you collect, we are looking at whether we can separate cows and buffalo's milk, and the kind of cows, whether they are Holsteins or Jerseys or the Indian cows. So we're looking at all this.
What else should we expect in the beverage market? Juice you've already done, so what else should we expect?
Well, you can expect coffee, you can expect tea. You can,
this year?
You may expect. I don't know. It depends on how prepared our people are.
How worried should the House of Tatas be?
Since you put me on notice, you just reminded me that I've got just 2 years left for my term to end. This is a growing market. That is why all the future of commercial future of India's capital depends upon, capital means the financial capital, depends upon how we can create jobs and then stimulate demand and then get into that virtuous cycle of economic growth. Then there is abundant opportunity for all of us. This area is going to grow manifold, and there is room for niche players. High-end niche players. There is room for those.
When you say high-end niche players, what segment of the market would you like to address?
In every segment of the market, there is a high value-added end of the market that you can occupy. You can specialize in areas.
Okay.
So we've got a new chief executive.
For your Infotech business, yes.
A lady, and she's very confident that we can grow this business. And also this business helps ITC to also be digitally savvy. And we are using information technology in every area of ITC's
But this is not going to be a
activity.
captive business for you. This
No,
is
no, it is not.
Yeah.
It is not. No.
So what is going to be the ambition then as far as this business is concerned? Because this is interesting. This is the first time that we're talking about it. So this is an interesting one.
To grow faster than the market is growing. And at a point of time, there will be a tipping point when we can really,
No, but do you aspire to be the
big moves?
Do you aspire to be in the TCS, Infosys, Wipro, HCL Tech Mahindra pecking order? Is that the aspiration?
See, aspiration is there, but whether that aspiration will get fulfilled in the foreseeable future is the kind of question that you would like to ask, perhaps. No, I think it will be a long haul, but it can be a very profitable and an area where you operate in niches and can create high value.
What is the size of the business today?
It's about 1,200 crores.
Okay, and are you looking at...
It's not that small.
Yeah.
So you can grow it inorganically and organically both.
Are you looking at inorganic growth? Because I would imagine if
you... Sushma Rajagopalan has got the remit to look at both avenues of growth.
Domestic, or you're looking at companies outside of India as well?
Both.
And again...
Anywhere where there is an opportunity.
So a niche IT services player is how you would like to position the ITC Infotech business. You could do it organically and inorganically.
Yeah.
What is the aspiration in the next 5 years, and how much are you willing to put in terms of capital, etc., behind this business? What is the war chest that you've given her?
I think we are laying a lot of store by information technology also.
Okay.
We're going to back that business.
You're going to back that business.
We're going to back that business.
And I would imagine when you say you're going to back that business, that means that you're giving her a significant war chest to go out there and make acquisitions.
Definitely.
And could we see an acquisition perhaps at the end of this year, year?
I have no idea. I think she has to come with the plan. And acquisitions don't come by, saying that we will have one acquisition. You're always on the hunt. And when you find something, a right candidate at the right price, and you can strike a deal, then you go and strike a deal.
Okay.
Yeah. You don't give out these targets to people so that they can raise their price.
And we'll bring you that entire conversation with YC Deveshwar this weekend. For now, we have to wrap up this edition of India Business Hour. Thanks for watching.